Hey everyone, welcome back to Corporate Decoder, the place where we decipher corporate filings, so you don't have to. Today we're diving into XOMA Royalty Corporation's proxy statement. It's not exactly a thriller, but let's see if we can uncover some hidden gems, or at least avoid falling asleep. Think of it as corporate spring cleaning, where they ask shareholders to weigh in on some housekeeping matters, a bit of the old and a bit of the new. So what is a proxy statement? It's basically a document that a company sends to its shareholders before an annual meeting. Think of it as a cheat sheet for the meeting, outlining the topics that will be discussed and how the board of directors recommends you vote on them. First up, we have the election of directors. Like any good corporation, XOA needs people to sit on its board. You as a shareholder get a say in who those people are. The board is recommending you vote for 7 nominees, all of whom are already serving as directors. It is basically an ask to continue. The nominees include Owen Hughes, the current Chief Executive Officer, and other long-time directors. The board is essentially saying, trust us, these are the right people for the job. Next, we have the ratification of the selection of Deloitte & Touche as the company's independent registered public accounting firm. Basically, they are asking you to approve their choice of accountants. The board recommends that you vote for it and mentions that Deloitte & Touche has served in this capacity since 2018. Again, the board is asking you to trust their judgment. It's like asking if you trust their taste in music. But with higher financial stakes, let's scroll to the important part, the fees that the accounting firm has charged. For fiscal 2024, Deloitte billed the company $1,536,013, up from $898,960 in 2023. Most of this comes from audit fees. This category includes fees for services incurred in connection with non-recurring transactions completed in each of 2024 and 2023. Things are about to get interesting. XOMA wants to move its legal home from Delaware to Nevada. This is like moving houses, but for a corporation. The board believes that Nevada law is more advantageous than Delaware law. They expect substantial cost savings and a lower risk of lawsuits as a result of the reincorporation. It seems that they think that Nevada will offer a more predictable business environment. Moving to Nevada is expected to facilitate the company's pursuit of value-enhancing business strategies, help reduce exposure to litigation costs, and enhance stockholder value over the long term. Here's another twist. XOMA wants to change the rules, so the board can change the bylaws without your approval. This proposal will allow the board to unilaterally amend the bylaws, whether the company stays in Delaware or moves to Nevada, consistent with overwhelming market practice. They state that it is in the best interest of the company and its stockholders when the board is empowered to effect S-band bylaw span changes promptly in response to changes in corporate governance practices, emergent risks, or similar matters. Next, OA wants to refresh its stock award plan, which is basically a way to pay employees and executives with company stock. They're asking for permission to add more shares to the pool, which means more potential dilution for existing shareholders. The board recommends that you support this proposal and says that it represents additional stockholder dilution of only 4%. Based on the current burn rate, it is expected to last for the next 3 years. Speaking of burn rate, let's take a look at how quickly XOMA is going through its stock. The 3-year average burn rate is 3.7%. That means on average they are issuing stock equivalent to 37% of their outstanding shares each year. They believe that the proposal will increase the share pool under our broad-based equity incentive plan by 880,000 shares, which they believe is reasonable. Lastly, they want the option to delay the meeting if they don't have enough votes to pass the other proposals. This is like saying, if we don't get our way, we'll just keep asking. We may ask stockholders to vote on a proposal to adjourn the annual meeting if necessary or appropriate, to solicit additional proxies if there are insufficient votes at the time of the annual meeting, to adopt any of the other proposals. Who owns XOMA? Well, the filing gives us a snapshot of the major players. Entities affiliated with BVF Inc., a private investment partnership that has focused on small cap, value-oriented investment opportunities for more than 20 years, owns a whopping 25% of the company, followed by FMR LLC, which owns 9.7%. Executive compensation is something that everyone loves to take a peek at. Let's see what the executives took home for 2024. Owen Hughes, the CEO, had a total compensation of $5,833,264. Keep in mind, a lot of that is stock awards. Thomas Burns, the Senior Vice President of Finance and Chief Financial Officer, took home $604,186, and the Chief Investment Officer, Bradley Sitko's total compensation was $788,900. as required by Section 953(a) of the Dodd-Frank Wall Street Reform and Consumer Protection Act and Item 402. Ivrajojan Dim, you are providing the following information about the relationship between executive compensation actually paid and certain financial performance of the company. Looking at compensation actually paid, our CEO Owen Hughes took home $6,378,561. The average compensation paid to the other executives was much lower, $2,645,422 for the same period, and as they reported, the company's shares had a total stockholder return of $26. For an investment of $100, $10.8 million in losses. Now, for one last thing, let's not forget about that handy clawback policy. This lets the company claw back bonuses from executives if they mess up the financials. It's basically a safety net in case things go south. The XOMA proxy statement is all said and done. Twancom, a royalty corporation, seems to be at a turning point. They're trying to position themselves for future growth. The shift to Nevada could provide financial and operational flexibility, but it's a strategic bet with potential unknowns. Investors should watch closely how these proposed changes impact OMA's performance in the coming years. Well, that was quite the corporate journey, huh? Make sure to hit that like button if you found this helpful, share it with your fellow investors, and subscribe for more corporate deep dives. Also, let me know in the comments what company you want me to take a look at next.